Hey everybody, William Shishadi here with Trinity Mortgage. It's been a while since we brought you a video. We took a little detour to go see our little grandbaby. But as you know, a lot of things have been going on in the news. As you know, there's constant talk about inflation. There's constant talk about interest rates continuing to go up. And one of the things that I know, and I've been doing this for 38 years, is that real estate and mortgages will always be necessary. They'll always be required. And most people, when I say most people, high 90% will say that real estate's a good investment, and it is. And it has been for over probably 150 years. We've had a couple periods where maybe 2007 or 8 or 9 where we ran into just a unique market, but maybe that's it. So when you think about real estate, it's always been a very good investment. Here's what we know. People are always going to want real estate, and as a result, they're always going to need financing. Okay. So as rates go up, though, the industry becomes more creative. What they do is they say, okay, how do we, counteract these increase in interest rates? So what you see a lot now is adjustable rate mortgages, rates that, are either fixed for 5 years or 7 years or 10 years. So it's still a fixed rate, but it's not fixed for 30. Most people in Florida only hold on to their homes onto their mortgage for about 7 years. So they would have had either refinanced their home or sold their home, but very few people hold on to their home for 30 years. So you might want to consider getting an adjustable rate mortgage where the interest rate is lower. Another thing we have for people who are like self-employed or people who don't show income to the IRS. You know who I'm talking about, right? Many self-employed people, they make good income, but they write a lot of stuff off, so their tax returns don't look very good. Well, the industry has come up with what we call bank statement programs, where we just count the income that goes into your bank, and we don't count the income that you show to the IRS. Very interesting program. So that's available today. We have programs where if you're an investor and you want to buy a property and you can't qualify for whatever reason, all you need is a down payment, and all the property has to do is earn enough in income, in other words, on a rental, to at least meet the mortgage payment. You got a loan. No questions asked. Obviously, credit's got to be there, but we don't even show income at that point. So I guess the point I'm making is there's a lot of programs out there that have become more popular now because of the increase in interest rates. So it doesn't mean everything stops. It doesn't mean you can't still buy a home. It doesn't mean that if you don't show good income on your tax return, you can't buy a home. Those programs are available for you. So I bring this up because our industry, and like most industries, when things change, they adapt. Okay, so more programs are coming online for people to still get mortgages and still buy real estate. That's always going to continue. It's the bedrock of our economy. So you can bet that those programs are out there. So if you need additional information about it, just give us a call and we'd be glad to talk about that. But believe it or not, there's many ways to qualify for a mortgage today other than just a traditional 30-year fixed mortgage. Thank you so much for listening. Please follow us on Twitter and Instagram. Please like us on Facebook. Please like us and follow us on YouTube. Subscribe to hit the bell so you get our next message or our next video. And also, please do us a favor and share our videos. We'd really appreciate it. And again, see you next time.